The AIM market has matured over recent years, but the market has seen some interesting developments. All of a sudden, an ASOS comes along, which started at £14 million market cap in 2001, and while still trades on the alternative investment market, now has a capitalisation of $3.7 billion. So you can see the potential for some of these small stocks on the market. But there are other benefits as well, as Chris Boxall from Fundamental Asset Management can explain. Chris, welcome.
Hello, hello.
Fundamental Asset Management, you run a fund of alternative investment market stocks. First of all, what's the reason behind this?
Well, specifically, it isn't actually a fund, it's always a portfolio. So each client has their own dedicated portfolio of AIM stocks, principally for inheritance tax planning purposes. So if they hold a basket of AIM stocks for 2 years, they fall out of their estate for inheritance tax planning purposes after that period. Now, it's a great tax planning tool, but more positively, it's been a great place to be from investment performance over the last few years.
Let's just go back to this business about the maturity of the AIM market, because alternative investment market investing is still seen by some to be a roller coaster event. You've got some stocks coming to the market, they're up and they're down and so forth. But there is a maturity now about this market, isn't there?
It's incredible. We did some analysis recently, and AIM is just maturing, or has matured so much. You've only got 1,007 companies on now, compared with back in the heyday of sort of 1,600. But it's so much more mature that the new arrivals are often more mature, better established businesses which still have a big family insider ownership. You know, they've been going for a while. Even the newcomers, in terms of the more sort of speculative ones, have actually been going for a while, so they're not raising totally new equity, which was a change from former times.
In your portfolio of stocks that you offer clients, so you brought along here a selection of 14 or so, but I want to talk about today, or to talk about some of them. Let's bring up the list and we can take a look in some more detail. And we've put these down in an order which gives a year-to-date return. But I mean, looking behind this, always, of course, it's interesting to see what the dividend yield is, for example. And of course, a lot of AIM stocks, contrary to what a lot of people believe, do pay a dividend. But you've got here at the top of this list 124% gain for Atlantis Resources. But underlying this, there is another story, isn't there?
Yeah, I mean, I chucked in Atlantis Resources. It's not a typical, by any stretch of the imagination, AIM stock for IHT planning purposes. We've only got it on very large portfolios. I put it in here for a little bit of a difference. I mean, it's an early stage Tidal Energy business. Whilst the year-to-date return looks really great at the moment, it's actually still below its IPO price, its submission price. It had a lot of legacy shareholders deciding to offload when it actually listed on AIM. But really, at the operating, it's done an amazing job of raising capital primarily for a new tidal energy project at the top of Scotland, which Scottish First Minister unveiled the opening of the equipment yesterday. So it's really a hot topic. The shares have had a great run, really on the back of some tremendous management execution, operating and also asset raising or capital raising. I mean, they have raised money from every available source. Private shareholders, institutions, Crown Estates, European Commission. It's been debt funding. It's been a great story in terms of fundraising.
You can see here as well on the list 0% dividend, so it doesn't pay a dividend. But at the other end of the list, you've got here a stock that's Alternative Networks, down 35%, does pay a dividend, 6%. What's your thought about this stock? I mean, because it's at the bottom here, doesn't necessarily mean it's one you no longer recommend.
It's a bit unfair on poor old Alternative Networks. It's been a great AIM story. It's up about 3 times since IPO many years ago. It's a great cash generation machine. So its free cash flow yield now is probably over 10%, and it divvies out a lot. Unfortunately, it had a slip up a few months ago. It got one part of its business addresses the mobile telephony end, changing rates, roaming rates, whacked it a little bit, and so the shares came off. But they have started to recover, and I think it could be a good recovery story. And in the meantime, you get paid to wait. You can afford to sit on this stock at 6% yield per annum. It looks like the dividend can easily be maintained. So you can sit patiently there, picking up your income, and then it should have should nicely recover, in my opinion.
Let's bring the list back up again and take a look at some more of your picks from here. Out of those, what two or three other stocks that you're looking at the moment in more detail? I mean, you do have some spectacular gainers there, but as I said, also those paying a larger dividend on the way down so far this year.
Can we perhaps focus on AB Dynamics? Because I think AB Dynamics is everything that AIM should be about, really. It's a small business.
What does it do?
It manufactures very, very specific testing equipment for the automotive sector, specifically for suspension management. It's got it creates autonomous driving vehicles for testing. So it's been in a really good position. It was founded by a guy called Anthony Best, who remains the executive chairman. He's quite elderly now, but he's just full of energy. He's got still a very big stake in the business, and it listed on AIM a few years ago, and it's gone up sort of 4 times since then. It's got its growth profile has been terrific, highly cash generative, big operating margins, and I think it came on AIM because there was the best route for it to take. Tony wanted the management to buy, but they were reluctant. Came on AIM, he's offloaded some of his stake, so you've got new institutions in, new private shareholders in, and it's been just a terrific story, a lovely, lovely little business that could keep going.
This is the thing about small businesses, isn't they? They've been started by someone that makes a success of them. Then there is a succession issue sometimes, isn't there?
Absolutely, yeah.
Is that something that worries you, either about this company or other AIM stocks?
Well, less so, because Tony's put a senior manager in place now, so he's very much chairman. So there's now a professional, chief executive who's also, done a great job since who came on an IPO, good finance director as well. So they put a team round it, and obviously the business has happened to leapt up another leg or two. They've just got funding as well for a new facility. So they've got ample cash to support this new manufacturing facility, production facility. So they're really well established, but it ticks so many of the boxes that you want to see in a little business. No, I went to see them a few years ago, and you just thought, wow, this is what you like to see, that kind of business.
Yeah. Any other picks you've got which stand out amongst others?
Announced today, Flowtech Fluidpower. That's been former private equity ownership, and it's been on the market a year or so, maybe a couple of years. It's struggled a bit, especially following Brexit. There are currency issues surrounding it, but the results today were really good. It's a business that distributes fluid power products, so lots of different products. It's got a very slick system out of its warehouse up north, and it's just a very well managed business, and I think it's generating a lot of cash, which is recycling into new acquisitions to drive that growth. So whilst its core business isn't necessarily in the great space, if that cash is coming through, it can grow in other areas. Again, you get paid to wait. 4% plus dividend is great at the moment.
Yeah. Last pick for this lot. What's your?
Why don't we go for Accel Media, because it touches your space as well. Accel Media. It's an affiliate kind of marketing. Pretty unloved a few months ago, but again, great results. Loads of cash on its balance sheet. There seems to be an element of distrust around it, but in the meantime you pick up nice yield. It was over 5% and a bit. So those that were willing to have a go have seen the share price recover, and they've taken a nice dividend, and there seems to be a lot more to go for in that stock.
Going back to the portfolio you offer, do you move stocks in and out very often, or do you have clearly you've got more than just this list, haven't you?
Yes, broadly, the larger the client's portfolio in terms of monetary sum, the more stocks we have. So we run a very diverse book. We don't like to be stuck, get too big in any particular stock, so we'll trim off. A bit counterintuitive. We don't necessarily run our big positions as much as some would suggest we could, but that's the way we like to play AIM. Typically, we'd run a minimum of 20 positions, maximum for a large portfolio, about 38. Very patient. We'll stick with them as long as the story remains the same, and we have faith in management. We'll stick with it. So that's why I thought this little basket would be quite interesting to follow. So we're not going to have to start leaping into other things. Let's see how this basket evolves. You could subconsciously you could add to the underperformers, take off to the larger ones. So keep your balance about the same. And I think it could could develop quite nicely.
And finally, what's your word about investing in small cap stocks from here? We've got through the Brexit vote, but now, of course, comes the process of actually going through that and starting the process to exit. The British Chamber of Commerce recently has warned that going to the back end of this year, there could well be a slowdown in the British economy. Got the Bank of England cutting interest rates. With all these, the backdrop of global events as well, what are your thoughts on AIM investing?
My thoughts, small owner-managed businesses adapt very, very well. You know, they really knuckle down and they adapt very quickly. So I don't think they're a bad place to be during times of change. That happened before, and they really can knuckle down. So I'm quite happy with them, and if I can see the cash coming through, even if there are a few short-term sort of headwinds, if I'm going to be still picking up a dividend, I'll stick with it. There may be some periods of underperformance, but history has shown, we've been doing this now for sort of 12 years in AIM for IHT planning. It's been a pretty tough period at certain times, but the performance has been phenomenal in what some would consider pretty boring companies that just keep on churning out the numbers.
Yeah, long-term investment likes boring companies because they do it all. Chris, thanks so much indeed. Chris Boxall there joining us from Fundamental Asset Management with his look at his AIM portfolio list.